All right, so tax season is here. Let's go over a W-2. Now, this W-2 is going to read for 2017. It's March 3rd, 2021. It's all the same stuff, my friends. You'll see some W-2s that are vertically inclined. Some are horizontal. This one's horizontal. My wife I got right here is vertically. It doesn't matter. It's all the same thing. All the boxes are the same. The numbers and the letters, all that is the same regardless of what your W-2 looks like. All right. So in this case, we got boxes A through F. Let's just start with that. Here's your social. That's got to be on there for sure. Here's the employer ID, their taxpayer ID, and that's going to be on there for sure. And don't forget, the IRS already has a copy of this, by the way. Here's your employer's name. That's box C. Here's your employer's control number. Sometimes that may or may not be on there. It doesn't matter on the 1040. Again, your IRS already has this. All right, so box E and F are just your name and address. That's it. All right, so boxes A through F, pretty self-explanatory there. You definitely want to make sure your social is in there and your employer's identification number is in there for sure. That's the most important thing. All right, so then we're going to go to the numbered boxes, and you're going to see boxes 1 through 5. 1, 3, and 5, not 1 through 5. 1, 3, and 5 are your wages. Now, here we see box 1 is $48,500. But yet box 3 and 5 are $50,000. Why the difference? Well, because if we look down here to box 12A, the letter D, and we look at the back of your W-2, it'll tell you what the letter D is. It's elective deferrals to a Section 401k plan. So here they put $1,500 to a 401k, which reduced their wages that were going to be taxed for withholdings. All right, so basically what happens is this 401k contribution that you put in, the $1,500, reduce the amount of your taxable income from a federal taxable income perspective, but it did not reduce it from Social Security and Medicare perspective. So even though you got a $1,500 deduction on your taxable income from a federal income tax perspective, that does not count as a deduction from a taxable income from Social Security and Medicare. And you'll see Social Security, they withhold 6.2% of your wages. That's your gross wages. They withhold it before you take your deduction from 401ks. And they withhold 1.45% from Medicare. Now, there's no limit on your Medicare income. There is, at least as we sit here today, there is a limit on your Social Security income, which is subject to that 6.2. So keep that in mind. So here, we got $6,835 from the federal taxable withheld, $3,100 from Social Security, and $725 from the federal Medicare, the Medicare tax. All right. We also had $1,500 that we contributed to a 401k, so that's $1,500 we did not get to spend. Now DD is, I forgot, is that life insurance? Cost of employer-sponsored health coverage. All right, so this is not taxable to you. They're just putting on there. I'm sure it's because it's tax deductible to the employer, but it just shows you, hey, we paid $1,000 towards your health coverage. All right, now line 12C, in this case, P is just relocation of a military member, and that's it. So that's not likely to happen for you. But they're saying, hey, we got $4,800 relocation expense. Frankly, I don't know if that's taxable or not. I don't think it is, but I could be wrong. Most people aren't going to have that. All right, but notice, so we have these three boxes here checked: statutory employee, retirement plan, third-party sick pay. Well, because we put $1,500 into an elective deferral on your 401k, they're going to check the retirement plan. Sometimes that won't be checked, even though you did contribution of 401k. I'm not sure if it matters all that much, frankly, but the facts are we know this right here is what you deferred from your income. So we had $50,000 of income, but we deferred $1,500 by putting that into a 401k. Remember, deferral just means it's to be taxed later. All right, then we go down to the line 15, which is your state, in this case, Commonwealth of Pennsylvania, old Jane. The employer state ID, and it's going to be different than the employer identification number. So you see the EIN for the federal tax is different than the employer state ID. $50,000 is the state wages. All right, again, it's weird because that is not reduced by the $1,500 they put in to the 401k. And the state income tax was $1,535. All right, so in this case, they had to pay $1,535 in a state income tax. That's 3%. So they paid 3% to the state, and they paid another 1.5% to the locality, probably Philadelphia in this regard. Good times, man, and a locality name, AW, I don't know what that stands for. Anyway, that if you're in most people are not like my wife. We live in Georgia. There is no locality income tax, so when we look at the state stuff, it doesn't show up there. But anyway, so what I want to point out, because what's happening here is you made $50,000, but you did not bring home $50,000. You brought home 50,000 minus 6,835 minus 3,100. Oops, minus 3,100 minus 725 minus $1,500 to your 401k minus 1,535 to the state minus 750 to this locality. You only brought in $35,000 after taxes and your 401k contribution. So if you made $100,000 for simplicity, you're only spending $70,000. All right. So as you're calculating your retirement plan, don't sit there and say, I need to have 100% of my pre-retirement income, unless you're heavy in debt, because you're not living off 100% of your pre-retirement income. You're literally not living off that. You're not living off this, not living off that, not living off that, not living off that, not living off this, and not living off that. I don't know why the state actually $50,000 they tax you on those wages as opposed to 48. I don't know. I guess each state's different. Maybe some states have they don't allow the 401k contributions to be excluded from state income tax. I don't know. I don't know why that's the case, but be that as it may, that might be up to your state. But in this case, again, your income is reduced by the amount of money you put into your 401k. All right. If you have other letters here, just look at the back of your statement. I think what's what's designated Roth contributions under employment plan. That's AA under 401k. There's cost of life insurance. Sometimes you have to pay tax on excess life insurance that you've received over the 50,000. It won't be much, but I'm trying to think what the elective deferrals. Yeah, I'm not sure what the letter is. Oh, right here, C. So a lot of times you'll see a C. Taxable costs of group life insurance over $50,000, and that will be let's see, including in box 1 and 3 up to Social Security wage base. So if you have a line C and say it's $1,000 for simplicity, that will be included in 1, 3, and 5 for taxable wages for Social Security, Medicare, and income tax. Anyway, hope this helps. Don't get too caught up on the W-2. Again, the IRS already has it. Just use the numbers they give you. If something looks awry, you need to call your employer and say, hey, man, you screwed this up somehow. But I wouldn't sweat it too much. So just get it done, and then should be good to go. All right. I'd love to hear your thoughts. We'll see you.